Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, good morning.
Hi, good morning. And tariffs are back in the headline.
That's right. I'm smarting a little bit from last night's loss. Team India going down to South Africa. But we've got an interesting week coming up for the markets. And hopefully our boys come up on top against the Windies
down,
as well
not
as...
out, right?
That's correct. But the margin of loss was too high. That means we need to beat the Windies as well as Zimbabwe by a greater margin to get our run rate intact. But I think we need to track the run rate of the markets and things should look pretty much better, I guess.
Pulse of the market, right?
Yeah, pulse.
Run rate, pulse. Well, let's just take it from the top then in terms of what we need to know. This is, of course, starting a new week and tariffs are, as Rima said, back in the mix of it. Now, I'll just kind of sort of run through just the sequence of events. The US Supreme Court, of course, threw out the IEEPA tariffs. But as was expected, this was widely expected from the market. So the US market reaction was next to nothing at all. Very, very contained. Trump, as expected, announced 10% global tariffs and then later raised those tariffs to 15%. So now, as things stand right now, the tariffs, global tariffs, are 15%. These 15% have come through. This 15% tariff has come through a True Social post. There will be an executive order which will come, and that should come today, tomorrow. We'll wait for it. The reason we'll wait for it is not because the 15% will be there or not. The 15% will be there, but will there be exemptions in that executive order? For example, in the case of India, if tariffs are 15%, electronic exports are exempted. Will most likely, I think these exports will be exempted, and I think those exemptions, etc., should be part of the executive order or perhaps in another document. Now, these 15% tariffs under a section called 122 will remain in place till late July. This is basically, you can impose these for 150 days, and then they can extend it with congressional approval for another 150 days. And by the way, there is lots of chatter that this itself may be a little, this may be borderline illegal, and this I think is being challenged in courts. And I think the basic crux of the issue is Section 122 allows US to impose tariffs if there is a balance of payment deficit, not a trade deficit. I mean, US does not have a balance of payment deficit. The world is going and investing and committing investments into the US. It's got a trade deficit. So on that question, there may be legal challenges and many are pointing that out, but the reason why I'm not putting too much emphasis on that and seeing that as a relief is because it will take time. I mean, it's not going to happen quickly. This took, 6-7 months. So even if there are challenges to this Section 122, by the time it works its way through the courts, I think it'll take time. Now, so that's till late July, 15%, right? Now, after late July, there could be longer lasting, potentially higher tariffs because that then will require Section 301. Under Section 301, the Trump administration has already indicated they will use this section. And this basically requires investigation. So, the USTR, the US Trade Representative's Office, will have to order investigations into X industry in X country, Y industry in Y country. That's cumbersome. It takes time. But I'm assuming, and I think as the president himself said, these investigations will kick off immediately and they will find a way to find results of these investigations by late July when these, with these tariffs, the 122, 15% tariffs start to come to an end. How long will this take? I mean, just to go back to history, when 301 was used against China in 2018, it took 6 months for the results to come out. So it's possible, if you just go by that, it's possible that you stay at 15% for, 5 months anyway, maybe a little longer. And then once the results of these investigations come up, you basically will roll over to these new tariffs, which perhaps could be higher as well. Now, expect India's tariffs to be around 15% or rise to around 18%. And I've said this when it came out on Friday evening as well, that don't expect very much by way of change. This is about this country and that country, but this is also about a dollar revenue which the US wants to collect to counter it. And these are substantial. So, for most countries, I mean, there may be a bit of lead and lag. For example, if somebody was at 0%, now they've gone to 15%. Now they'll have to be given exemption. Somebody is at 25%, they've gone to 15%. So there will be advantage. Like, for example, Malaysia is charged at 19% now they're 15%, which means there's an advantage. But that advantage or disadvantage will not last very long, is the point I'm making. They will recalibrate these tariffs using 301, Section 301, to get tariffs to where they were before the US Supreme Court ruling. So that's a short point that I wanted to make. Now, just a quick look at what we heard from the US trade representative, etc. Now, by the way, the trade deal will have to be reworked because the basis of the trade deal was the IEEPA tariffs, and that is gone. And I think we are hearing it from the Indian side and others as well. This is what the US trade representative said. He said US plans to stand by its trade deals and expects its partners to do the same. Besant said that they don't expect tariff revenue to be very different from what they assumed in 2026. So this also gives you a sense of the fact that they will recalibrate all of this. Trump, by the way, we will hear from President Trump on video tomorrow, and it will be Wednesday early morning for us, I think, the State of the Union address, and I think he's, of course, going to lash out against the US Supreme Court justices, etc. There is the US-Iran bid as well. On Friday, going into the weekend, it was looking like perhaps there would be escalation. Talks are set to resume in Geneva on Thursday, so we'll see how this goes. In terms of market reaction, as I said, immediately on Friday, Wall Street reaction wasn't very much. Dollar is down this morning. The dollar index is down about, I think, 1/3% or so to 97.44. So that is meaningful. Gold futures are at about 5,100. Silver has come off sharply to about 86, 87 dollars or so. So that's essentially some signaling as we start out our session. Now, the Nifty levels, we are within, despite Friday's bump, we are within a downward sloping short-term channel. We closed exactly at the midpoint of that downward sloping channel, which is 25,570. The support, the lower end of the channel is 25,270, which is the support, and the upper end of that channel is 25,840. So 25,300, 25,800. That's basically the upper end and the lower end of the channel, and we are right in between. GIFT Nifty will give you a sense of how we likely to start, and then we will take it from there. I think it's about 180 odd points higher at this point. Let's go back to the markets and the F&O positioning, the stats. How do they look? Nigel has walked across the wall. Nigel, over to you.
Well, given that the GIFT Nifty is suggesting that we're going to see a big gap up, by the end of today, actually, you'll want to see that sort of a gap up sustaining and maybe build on from there as well. That's going to be rather important. Remember, we get into expiry tomorrow. So the bulls actually will be latching onto these gains. In terms of flows, the DI is net bought on Friday, while the FI is net sold. You put the institutional number together, the net buy number was close to around 1,600 crores. You like that. The FI as well, they seem to have sensed that there was a risk to their aggressive defensive stance. Let me explain. They added close to around 8,000 long contracts for a close to around 3,000 short contracts. And in percentage terms, the FI short positioning added around 75%. That's the lowest that we've seen in the last 4 months or so. Looking at the stock futures, well, they added longs and they covered some shorts as well. So that's why I'm saying that they were very, very defensive and appears to have sensed something is in the offing. They also went ahead and they wrote puts very, very aggressively in Friday's trading session. So put everything together, they added more longs, both on index futures as well as stock futures, and they wrote puts very, very aggressively. So they seem to be coming off a little bit on that defensive stance. The PCR has moved back to around 1. Remember, in Friday's trading session, it had gone a little sub 0.7 as well. And from there, it's popped back up. Because the calls that were written earlier, they started getting unwound very, very aggressively. Case in point being the 25,800 call, 25,600 call as well. Massive unwinding is what we saw at them. And there is writing being seen at around this 25,500 put, which coincides with the support level. Remember, last week, we had, the lows were close to around 25,373. That becomes a reference point on the downside. And the 200 EMA as well is in that vicinity. So that's where the support zone is at. But resistance, 26,000, the bears will want to defend that. Remember, the last few trading sessions, multiple times, the bulls have taken the market around 25,900, and then we have seen a bit of a come off that. So that 26,000 mark remains an extremely crucial resistance mark. Now, since economic activity is reportedly picking up on the domestic front, earnings are expected to look up, and it appears that peak Trump tariffs seem to be behind. Throw in there as well, the currency volatility has cooled off. The rupee has strengthened a little bit as well. So the broader markets now need to catch up and need to outperform from here on. My sense is that the small cap index as well as the mid cap index could actually outperform from here on, putting everything together with regard to domestic activity, the sentiment seems to be turning as well, and they've been ranked underperformers. So let's see how that goes. I think the next 3 to 6 months, we'll know.
Thank you very much for that. But back to tariff talk. And following the U.S. decision on Trump tariffs, President Trump, in a media conference, confirmed the deals with other countries, including India, stand as is. Listen to what he had to say on the India-U.S. trade deal.
The India deal is on here.
Mr. President.
Thank you so much, Mr. President.
All the deals are on it. We're just going to do it a different way.
The framework which is to be signed with India sometime soon, will that stand now? And on the decision,
changes.
Nothing changes?
No, nothing changes. They'll be paying tariffs, and we will not be paying tariffs. Our deal with India is they pay tariffs. This is a reversal from what it used to be, as you know. India, and I think Prime Minister Modi is a great gentleman, a great man, actually. But he was much smarter than the people that he was against in terms of the United States. He was ripping us off in India. So we made a deal with India, and it's a fair deal now. And we are not paying tariffs to them, and they are paying tariffs. We did a little flip.
All right, let's get in some opinion as well. Venugopal Gare of Bernstein says, for countries which have signed the framework for an agreement like India, this puts further negotiations in a state of limbo. For India, he says, the foundation for 18% tariffs is now deemed illegal, and it effectively qualifies for a 15% rate plus 3.5% most favored nation rate tariffs, which are but much higher for specific sectors where the MFN most favored nations rates were in single digits or more. He says, as per their understanding, these tariffs stack on top of the most favored nation tariffs that were in existence before Trump took office for the second term. And hence, he says, for sectors like textiles and finished jewelry, they would end up seeing higher tariffs than they would have had under the trade deal. Hence, he says, this is a negative development instead of a positive one. That's one.